Hey everyone, welcome back to the channel. So in this video, I want to talk about an ETF that honestly surprised me a little. I did not notice it as it is not trending on YouTube or someone recommended it on social media. I actually found it by accident while I was playing around with the ETF screener on the stock analysis website. I was actually sorting ETFs by total return year to date, and this ETF kept showing up near to the top, and the ETF I'm referring to is GDXY. Now this immediately caught my attention because first of all, I don't currently have any exposure to gold or gold miners in my portfolio, and second, when you see something ranking very high in total return but nobody is really talking about it, that's usually a signal that something's interesting or something risky going on under the hood. So in this video, I want to walk through what GDXY actually is, how it generates income, what the risks are, and most importantly, whether this ETF makes sense at all for income investors like us. As always, quick disclaimer before we start, I'm not a financial advisor. Everything in this video is for educational and entertainment purposes only, based on my personal research and investing experience. Alright, let's get into it. So first thing first, what exactly is GDXY? Well, GDXY stands for YieldMax Gold Miners Option Income Strategy ETF, and this part is very important. GDXY is not a gold ETF. It is not the same as owning physical gold, and it is not the same thing as simply buying gold miners stocks. Instead, GDXY is an option income ETF that is linked to gold miners. Specifically, it uses the VanEck Gold Miners ETF, GDX, as its reference asset. So if you are familiar with YieldMax products like Tesla or QDTY, the structure here is similar in concept, but applied to gold miners instead of tech stocks. Now let me explain how GDXY works in simple terms. GDXY does not hold GDX directly in large size. Instead, the fund holds mostly short-dated US Treasury bills, cash equivalents, and on top of that, it runs a synthetic covered call style option strategy on GDX. So what does that mean? It means GDXY is essentially selling call options linked to gold miners, collecting option premiums, and then distributing that income to investors. This is where the very high yield comes from, but there's a trade-off. In exchange for the income, GDXY gives up part of the upside if gold miners rally hard. So you're not buying GDXY for explosive growth. You are buying it to harvest volatility for income. Alright, let me bring up the chart because this is where things get really interesting. What you're looking at the screen right now is the daily chart for GDXY. And the first thing I want you to notice is this. GDXY is not trending aggressively upward or downward. Instead, it has been trading in a fairly wide range. Roughly speaking, support is around $14.20 to $14.50. Resistance is around $18 to $18.30. And right now, the price is sitting around $16.30. So we are basically in the middle of the range. That already tells us a lot about this ETF's personality. This chart tells us that GDXY behaves like an income instrument, not a momentum stock. If you look at the moving averages, price keeps crossing above and below 20 and 50 EMA. The 20-day moving average is relatively flat. That's classic range-bound behavior. And that is exactly the kind of environment where option selling strategies tend to perform best. Sideways markets, choppy price action, enough volatility to generate premiums. So when people ask, why is the yield so high? The answer is because GDXY is designed to monetize this kind of price action, not to chase long-term capital appreciation. Now let's talk about the downside. You'll notice I highlighted this zone around $14.20 to $14.50. This area has acted as strong support multiple times. Each time GDXY dipped into this zone, buyers stepped in and the price stabilized. But here's the key point, and this is very important. Even during those drawdowns, distributions continued, so income didn't stop just because price went down. That's a double-edged sword. On one hand, income investors like that consistency. On the other hand, it can sometimes mask slow NAV erosion, especially if someone only focuses on yield and ignores the price. Now, quick pause here. If you have been enjoying the video or learning something new so far, do consider liking the video and subscribing to the channel. It really helps the channel grow, and it tells YouTube to show this content to more people who are trying to learn about income investing as well. Alright, let's continue. Now, let's talk about the headline numbers. Over the past 12 months, GDXY has roughly paid out $7.97 per share, and at a price around $15 to $16, that translates to a 40 to 50% trailing yield. And yes, that number is real. It is not a bond coupon. That yield comes mainly from option premiums, and it can fluctuate significantly depending on the volatility and strategy performance. Since its launch in May 2024, GDXY has shown a negative partial first year, followed by a very strong 2025 year-to-date performance, with total return exceeding 70% at one point. However, it has also experienced drawdowns, so it is not a low-risk product. High income does not mean low volatility. So when does GDXY actually works well? GDXY tend to perform best when gold miners move sideways to moderately bullish, volatility stays elevated, there is no sustained runaway rally, but GDXY can struggle when gold miners trend strongly upward or when there is a sharp prolonged sell-off. If gold miners explode higher, GDXY's upside is capped. If gold miners collapse, option income cushions the fall, but it does not eliminate losses. So who is GDXY actually for? Well, it might make sense if you want aggressive income, you understand how option income ETF works, and you are treating this as a small satellite position, not a core holding. GDXY is probably not suitable if you want clean exposure to gold or gold miners, you want predictable bond-like income, or you cannot tolerate price volatility. This is a tool, not a foundation. So for me personally, what intrigues me about GDXY is this. It gives me indirect exposure to gold miners, it generates very high income, and it behaves differently from my tech-linked income ETFs. So this is what I'm going to do. Not financial advice. I will wait for a big fat red day, preferably getting closer to the support level, and add my first tranche of GDXY. I would never size this aggressively. This will just be another source of income as I do not have exposure to gold miners. Alright, so that's my analysis for GDXY. Let me ask you something. Would you buy GDXY for income, buy GDX directly for growth, or skip gold miners entirely? Let me know what you think in the comments. If you find this breakdown useful, do consider liking this video and subscribe to the channel. It really helps the channel to grow. Alright, thanks for watching, and I'll see you in the next one.